Gold is the secret star of 2025, but after this incredible run up, where will gold go now? Will it break down? Are we going to 3,000 and above? We'll talk about it in this video. And there's a development happening in another market that nobody's talking about yet that will have such significant effects for gold and the commodities. You won't believe what you're going to see. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, welcome to Hot Trades of the Day. So we're going to start with the gold price. Here it is. You see the gold chart, and you can see very clearly that we are developing a sideways consolidation. This is very, very good. This is the most positive type of consolidation that you can have. And as you can see, the upper end is this doji. By the way, this is not a topping tail. This is a doji. Still very bearish signal. But look what has happened since then. We had a sell-off the next day that was bought up, very bullish. And since then, we've consolidated sideways. Now, we have not taken out this doji yet, which we will do if we close above it. And that obviously would be very bullish and would clearly indicate that we're going to go to 3,000, maybe even a little higher. However, more important for us is we are protected to the downside in gold very well with the lower end of this new sideways channel that has been in place now for a week. Most people don't realize this. Gold has now been in this channel for a week. Now we're at the upper end of the channel, so it feels like we're going up. But as you can see now, the truth is we are still in this sideways consolidation. And that is really positive. Again, we have two ways how we gonna consolidate gains. With a correction by falling prices, so overprice, or by going sideways over time. So corrections happen over price and over time. Obviously, we prefer over time. Why is that? Because that shows us that nobody wants to sell their positions. They're holding on their positions. There are just no new buyers in the market yet. That's as positive and as bullish as it gets. So again, we are protected to the downside very well with the lower end of the sideways channel and this mid-term uptrend that started basically at the beginning of the year. So this is gold. It looks good. We like it. We will stay invested in it. But what we definitely want to do is we want to add gold mining stocks. That is where the action is. And I'll show it to you in the next video. And it will definitely, absolutely blow your mind what you're going to see there. Little tease for what's coming up in 2 days. So let's look at the GDXJ. This is the ETF for the junior gold miners. And you can see incredible uptrend in 2025. Very, very strong performance. But you can also see that we have reached a resistance zone, this small blue zone in here. We tried to get above it twice now, weren't able to make it, so we made a double top on the short-term time frame, and it led to a sell-off, nasty candle sell-off. Why is gold looking better than the junior miners? Two reasons for it. First one, obviously, the junior miners, the smaller the mining companies get, the less institutional money you have in it, the more retail money you have in it, and the retail investors are not on the gold train at all, which gives us a great chance to get in before the main retail rush will happen, but at a way later stage. If you talk about it in like hockey terms, right? We're probably in the gold rally now in the first first quarter of the first period of a hockey game. You have 3 periods in a hockey game. The retail money usually comes in second half of the second period, and then really strong in the third period, in the end, in the final stages. We see this all the time with crypto. So where will JDXJ go? Probably, if we keep going sideways, it'll probably go to this area here, the gap fill, and the support zone right here. This could be a first grade buy, second grade buying opportunity. If we ever get there, would be obviously that gap fill. I doubt that we're even going to get there, but it's possible if gold starts to correct in price instead of time. So let's talk about, because this is the chart you need to see. It'll blow your mind. What can push gold prices and then therefore push the gold mining stocks higher? And it's the dollar. Look at this. Look at what is happening. What you see here is the rally in the dollar in anticipation and then in the result of the Trump win in the presidential election. And you see we have broken this uptrend. The dollar is falling, ladies and gentlemen. This is the daily. We see it is making lower lows and lower highs. But this is not the chart you need to see. Let me switch to the weekly and be ready to see something that would change everything for gold, silver, the commodities. This is the weekly chart. And look what we have here. We have been in a sideways channel in the Dixie. So the US dollar against the basket of currencies, and the euro makes up 50% of this basket. So it's almost like the dollar against the euro. So the Dixie has been gone sideways for 3 years. And as you can see, we broke out above this sideways trend in the winter of 2025. We've broken the uptrend. I already showed you this. We retested the uptrend, rejected it. We're going down on the weekly. And now we are on the cusp of falling back into the sideways channel. Nobody is positioned for this to happen. Everybody is long the dollar, which makes sense considering the breakout, which is a historical breakout, which is a major buy signal. Well, it looks right now like there's a real chance we're going to fall back into the sideways channel. And if that happens, the dollar is going to go much lower. We're talking midpoint of the sideways trend, but really the lower end of the channel. Because nobody is positioned at the moment for a falling dollar. Who is the main beneficiary of a falling dollar? Gold and the commodities. So if you are wondering what will fuel the gold price to go up if everything is good with the US economy, it's stable and the stock market is going up and people are still high on the risk investment scale, it's the falling dollar. Which, by the way, will be great for US exports. It will be good for the US economy, right? Trump will dance in the White House if the dollar goes down to the lower end of the sideways channel. Now, publicly, he might say something different because he needs to keep up the image of America first. But we know from his statements in the past, Trump prefers a weaker dollar. So that will fuel gold and the commodities. Because the dollar and gold have an inverse relationship. If the dollar goes down, gold goes up. So you add this development on top of the aggressive buying of central banks. This is the weekly in gold. Look at this incredible run up. You would have thought by now, we're going to have at least one red candle. We're going to have a correction here. Nothing. Why is that? Because the central banks are buying, and they don't care if they pay $10, $20 more for an ounce of gold, right? Because for them, it has geostrategic implications, macroeconomic implications. They're thinking in terms of 5, 10, 15, 20 years building up gold reserves. So for that, it doesn't matter if the gold price has gone up $30, $40, $50. That's peanuts in the grand scheme of things for the central banks. That's why there are still buyers. So as soon as gold jumps over this yellow resistance zone that you see here, which is the upper end of that bearish doji from a week ago that is still controlling the gold price right now, as you can see, we'll have the next leg up in gold. And in the medium time frame, it looks really, really good. And now we have this ace up the gold sleeve of a potential of the dollar falling back into the sideways channel and then triggering a major short signal on the dollar that nobody's positioned for. Talk to you in 2 days. Then we're going to talk about the mining stocks, and you won't believe what you're going to see then. Bye-bye.